Ladies and gentlemen, welcome back to the channel. What an eventful short day of trading. The S&P exploded higher to new all-time highs. We got some blowout job numbers today that nobody was expecting, that really caught everyone by surprise. We heard from Scott Bessent today. Lots of tariff talk, trade deals, and inflation talk there. We heard from Fed Bostic as well. I will share all of this news with you here in this video. Recession odds are falling down to the lowest level they've been at in a long time, and stocks continue higher. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time as well, check out that link down below in the description of this video. We are offering a product that nobody else is, because what we do, or what I do personally, is spend hours every day trying to find the next big winner. Now, the next big winner that's going to go up 10 to 50x is a small cap, unfortunately. It's not going to be a $50 billion company that goes up 10x. That happens very rarely, okay? But that small cap can easily go from 300 million to 3 billion if it's in the right field, the right industry, like AI or biopharma, so on and so forth. The problem is, and why a lot of people don't do this, is it takes a lot of time. And it takes a lot of time going through these stocks, trying to find the good ones, filter through the bad ones, because it's not just a numbers game. A lot of it is psychology as well. Like, for an example, if everyone knows about a stock, I'll tell you right now, you're not going to come across it one day and market's got everything wrong. Very rarely does that happen. What I'm really looking for are stocks that nobody really knows about right now. I look at YouTube, right? I'll type in the stock and see if there's YouTube videos on it. If there's not, that's a green flag. I'll go to StockTwits. I'll look, see if anyone's talking about it. If they're not, that's a green flag. I'll go to, X, type in the ticker symbol. If nobody's really talking about it, that's a green flag. If it's doing the right thing in the right industry, like right now, AI and certain biopharma names, hey, that's where the opportunity is, in my opinion. We are investing in these stocks. We are doing very well thus far. I believe the portfolio is up 65% year to date so far, with I honestly think that thing's going to be up over 100% this year. But hey, we will see where things ultimately hash out. Nonetheless, if you want to check it out, link down below in the description of this video. Let's go ahead and get started. First and foremost, we had the non-farm payrolls and the unemployment rate. This really shocked everyone. Non-farms, a lot of firms were around 80,000 jobs. That was kind of the expected number by, again, a lot of firms. We came in much higher than that, right? We came in at 147,000. Last month was actually revised higher as well, from 139,000 up to 144,000. The Wall Street consensus was 110,000. So across the board, everyone was pretty shocked by today's jobs report. It was much stronger than expected. Now, the unemployment rate was expected to rise from 4.2% to 4.3%. It actually fell down to 4.1%. So literally, like, picture perfect jobs report compared to expectations. Now, exports came in lower than around expectations. Imports came in around expectations as well. So we should be holding pretty steady with the Atlanta Fed GDP Now tracker. Yeah, it was revised up 0.1% from 2.5% to 2.6%. So a little bit of an upward reevaluation in Q2 GDP. But again, very strong economic data today. Now, some parts of the market, like small caps, some more high beta areas, didn't do as well. Something like Tesla did not do as well. And that, to me, is the wrong way to look at this market, right? You don't want rate cuts for the wrong reason, okay? If we're getting rate cuts, you want it because there's no inflation, okay? You don't want rate cuts because the economy is getting weak. So I've said this before on the channel, and I will say it again. every single time. You want strong data, no matter what the F the markets think or say or think they want, okay? You always want good data, okay? Every single time. The rate cuts can wait. Who cares? As long as the economy is good, that's what matters. Because, you know, what Wall Street is really trading on right now is 2026 expectations. So Wall Street is not sending stocks to new all-time highs because, you know, 2025 looks all too great, although it's not terrible either. Stocks are doing well because people think 2026 is going to be a good year and we're going to get a lot of rate cuts. This jobs report doesn't change that because we have a new Fed coming in that's going to, you know, want to cut rates a lot more. So less rate cuts with a strong economy is actually more ideal for your risk on trade. Keep that in mind. I think some people got the messaging wrong today. Now, in other news today, Fed Bostic says that the Fed must be more explicit in how it discusses its jobs mandate. U.S. Treasury Secretary Bessent on jobs data says any 1 month can be noisy. Overall trend is good. Bessent says we are at a very high real interest rate right now, but he says it's up to the Fed to decide where rates go. He says we're going to see things take off by Labor Day in September. China's Foreign Minister Wang Yi says rare earths are not a problem between China and Europe. Bessent says that Trump will determine if nations are talking in good faith. He says that the looming election in Japan may be constraining talks. Bessent says U.S. Trade Representative Greer will be working over the weekend with the EU. And Treasury Secretary Bessent says we'll see what we can do with the EU. Bessent says that he met with its EU trade counterpart this morning. It says yet again today that nations should be careful. Their rate could boomerang back to the April 2nd rate. Fed Bostic says that tariffs have not been set quickly, leaving businesses uncertain what final rates will be and waiting to make pricing decisions. And Bessent says we are going to see more trade deals. Bessent says that tariffs could lead to a one-time price bump. And then Fed Bostic says there is a significant risk that upward pressure on prices will be around for some time. Guys, these Fed officials are incompetent. There's no other way to put it. And Bessent says that Vietnam's 20% tariff doesn't stack on top of the 10%, so it's 20% total. And he says that 20% is the reciprocal rate for Vietnam. Bessent says what we've seen so far is that tariffs haven't hurt. Bessent says, I'm going to stick with the market's take, not economists, again, on tariffs. And China's Foreign Minister Wang Yi says it is China's right to control rare earth exports. Following this morning's jobs report, recession odds are collapsing on betting markets like Kalshi, falling to 19%. These were as high as 70% 3 months ago. The IMF says the US needs to reduce its fiscal deficits to put debt to GDP ratio on a decisive downward path and needs to reach consensus on how best to do that. Fed Bostic says businesses are delaying hiring and investments. I expect demand to stagnate or decline if costs continue rising. Bostic said he expects longer period of elevated inflation, but no spikes. And he says it's not the right time to shift monetary policy given uncertainty. And Bostic says, I see a higher risk that inflation could unanchor expectations. And the US plans nuclear talks with Iran in Oslo next week. U.S. Treasury Secretary Bessent says if the Fed doesn't cut here, maybe the September cut will be bigger. Fed Bostic says consumer reaction to tariff pass-through is uncertain. I'll tell you right now, consumers are not going for inflation anymore. Like, they will slow down their purchases or stop buying certain things. If you want to raise prices, that is the cost of doing business. Find a different way to keep your margins healthy. And I think that's kind of part of the bull case for AI, with tariffs potentially, you know, raising costs. If you can use AI to offset that, that is a huge catalyst for AI stocks and for AI broadly. Bessent says there are a lot of good candidates for Fed chair, and he will start working on that in the fall. Bessent signals that Trump's appointed Fed members have a different take. And following a Putin-Trump phone call today, quote, Putin said we continue to seek a negotiated solution on Ukraine. Percent of stocks trading above their 50-day moving average today, sitting at 74.88%. So definitely on the high side, but I mean, it can get into the mid 80s. This is just telling you that a lot of stocks are going up right now. There's a lot of positive market breadth, which, you know, is exactly what you want to see in a bull market. Now, the CNN Fear and Greed Index today is jumping a lot, jumping from 63 to 77. Market momentum in greed, stock price strength, extreme greed, stock price breadth, extreme greed, put and call options, extreme greed. Market volatility is neutral, safe haven demand, extreme greed, and junk bond demand in extreme greed as well. So across the board, your metrics are looking, you know, pretty hot for sure, but doesn't mean that it can't go higher by any means. Now, you did get a new AI investor sentiment survey today. Okay, bullish investors jumped to 45%, which is the highest reading we've seen in a long time. The 1-year bullish high is 52.7%. So you're starting to get more bullish again, which you know, looks good, but is actually not a great sign, because you want to see, you know, a healthy level of bears always. And there still is, okay? You're just back to basically where you were in early June as far as bears. Bears came in today at 33.1% and neutral investors at 21.9%. So, yeah, bullish investors now outpace bearish investors by about 12%. So, yeah. We haven't seen that in a long time. This is only the second week out of 13 weeks now that you've had more bulls than bears. So again, do not get lost in, you know, what everyone else is going to say or what even happens short term for stocks. If we do get good economic data, if some of your higher beta stocks do poorly, don't forget that that is, you know, actually good for the risk on trade. Now, I realize the S&P was up a lot today, but it was not even. Some stocks did not do well. Other stocks did very well. Now, the SPY hit a high today of 626.28. So what I've said here recently is I think you can reach into the mid 630s before this rally really starts to get a little toppy, okay? Coincidentally, back July 10th or so was when the RSI was overbought the last time. July 10th of 2024, the RSI got to a high of about 83. Today it's at 76, okay? We've talked about this for days now. We've been, I mean, spot on this market. Like, we projected new all-time highs were going to come, that a breakout rally would come, and that's exactly what has happened. I mean, from those videos, the S&P's up 5.5%. Like, we expected this, so don't be surprised when I say in the mid 630s on the SPY, you're going to stall out a little bit. Okay, you're going to see a little bit of a rotation, but I don't think that means we see a correction. You know, 2 to 3% shop in either direction, you know, seems like what's going to come next for markets. Now, the RSI doesn't immediately mean things need to roll over. Again, on July 10th, the RSI peaked out 2024. You actually went up another 3 days in a row before you ended up falling. So we could hit as high as like 6,500 if this market gets pretty euphoric here over the next week or two. But eventually you will stall out and consolidate a bit. Now, I think ultimately we're headed for 700 by the end of this year. That to me is pretty certain. There's a lot of reasons to be bullish on this market. Don't forget that. Okay. But I do think it's time to maybe trim some stocks like Robinhood. I bought Robinhood the April 7th, you know, low, and that stock went up 100%. That stock chart is parabolic. I sold out of that position just because of that fact. Like, I sold out at like 100. Like, that's, you know, some things are getting pretty extreme. If things are at extremes, then perhaps, you know, taking a profit or two Never hurt anyone. And you also have to think about some of these stocks like Robinhood that I sold out. It's now a almost $100 billion company last I checked at $100 per share. Like, I see a lot more potential upside in other stocks in something like Robinhood, right? $3 billion company trading at a $100 billion valuation that's in the fintech space, essentially, finance space. Like, that to me doesn't seem that attractive. You know, just personally, that's like 30 times sales. Okay. That's a tough pill to swallow. I think other stocks could go up a lot more. So that's the hard part right now, I think, is finding like, hey, should I sell this one? Is this one a better, risk reward for the next 6, 12, 18 months? That is what I would say, or employ you to explore in your portfolio. Nonetheless, I remain incredibly bullish on this market. I think we're not going to see inflation from tariffs. I think we're going to see a lot of rate cuts over the next 12, 18, 24 months. I think AI is not going anywhere. I think the use cases for AI will only continue to grow. I think we're going into an AI super cycle as markets realize, hey, this is like, the dawn of the internet, but without the bubble kind of formations, right? Like, unless you invested in the internet once it actually became like, oh my gosh, like the internet is here to stay, like 2002 through like 2007, unless you invested during that 5-year horizon, that time period, you've never seen another opportunity like this. AI is like nothing else you have ever seen before. Odds are, I don't think Wall Street's going to want to miss that in the slightest bit. So I do think we're going to have a bit of a, AI euphoria wave in markets. I do think things could get a lot more crazy from here, especially as we start to get cuts, as the economy holds up, we don't go into a recession, as we start to get rate cuts, geopolitical tensions die down. Effectively, they already have. We have the tax bill coming in, which no tax on tips, no tax on overtime should really help the lower income consumers, which I think is a whole nother thing to think about. I could honestly, go on and on here. Deregulation, right? There's a lot of positive things happening right now. It's really hard for me to find the bear thesis in this market. Add on to that, we're going to get trade deals, and that situation's pretty much over with. Like, you really have to think like AI is a bubble or something at this point to be like bearish firmly, or that inflation is really going to come roaring, which I don't think either one of those things are true or going to happen. So again, let me know your thoughts on this down below in the comment section. If you guys want to come trade with us live in real time, come join the golden era of investing, in my view. Check out that link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.